This is Debt Free in 30. Here's your host, Doug Hoyes.
Let me play you a clip. We're going to start with a clip, and then you can give me your thoughts on this.
The first time I ever went to a payday loan was because I have two dogs at home, and one of my dogs decided that he wanted to eat a sock and he had to go to the vet, and I didn't have the money to cover the vet bill, so I had to go and take a payday loan out in order to get him his x-rays and things like that, so that's why.
So unexpected pet expenses can lead you to be getting payday loans and other things. We would like you to be able to avoid that. That's why we're doing this show. How do you know if you're dependent on credit?
All right. Well, simply, do you pay cash for everything that you buy, or do you have to pull out the plastic? So if every time you have to purchase something, gas for the car, bread and milk at the convenience store, are you pulling out a plastic card to make the purchase, or have you got $20 in your pocket?
And so is that a problem? Like, it sounds to me like that's a great thing. I use my credit card for everything, so I get all these points and miles and all these other things.
Yeah, years ago you said credit is a replacement for cash. It's not a replacement for
borrowing.
Right.
I did say that.
You
That's
did.
I should
Is
put
that in your book?
Is that in the book? Ted got to the promo for the book right away. That is fantastic.
So the important thing is, are you using credit like a tool, or are you using credit because you don't have any choice?
I don't know what the title of this show is going to be. We don't figure it out until we actually put it up. But it'll either be something like high-tech banking for the digital age, or how to bank for free. That's probably an even better topic. So when I was your age, and we're not going to tell people how old you are, we went to a bank. That's how it worked. When was the last time that you were in a bank?
Last time I was in a bank would have been 2020, right before everything
all
got
of the
shut
events
down.
happened.
Right.
And I think a lot of people are in the same boat, that it's been a long time
Maybe.
since anyone did anything like that. So let's start by talking about how can I bank for free? Let's start with that, because when I go to the bank, my bank account, and I now have a seniors bank account. I know, pretty cool, eh? And so they charge me a bunch of money, but then I get some kind of rebate or something. I don't know exactly how it works. But a conventional bank account at a conventional bank has a service charge.
Usually, yes.
How can I not have a service charge? Let's start with that.
So normally the service charges are related to banks that you're going to in person. So a lot of the newer online, whether it's a digital checking or savings account, they don't have a monthly fee. Now there might be some fees for a currency exchange or something like that. So there are fees that are in some of these banks. However, if you're just doing your banking from your phone, from the computer, a lot of them just don't have a monthly fee.
Now, as frequent listeners know, we don't have any sponsors on this show.
Of course not.
We should, but nobody has ever phoned me up to give me money. So, but we'll mention names today, because why not? It's not like anyone's paying to be on this show. So when you say digital or free or whatever, who are you talking about?
So for speaking specifically about a checking account, somewhere you can deposit a check or write a check from, that would be like your Simply Financial, Tangerine Bank, something like that. Those would be your most common options.
Those would be the two common ones. Okay. And then, there's credit unions as well that do things. There's bricks and mortar banks do have special programs and whatever, if you're a senior, if you're a young, or whatever.
And they'll also do the minimum kind of style checking accounts where you get like something like 6 or 8 transactions for the month, and you pay a lower cost for that. However, if you can manage with the lower amount of transactions, then perhaps you pay that lower fee, but why limit yourself with transactions if you do a lot of transactions from that checking account?
The Canadian Revenue Agency has had guidelines for several years now, over 15 years, about the difference between what is grocery and what is not, what is snacks, and what are snacks. And right now we're seeing more and more products being shrinkflated so much that they're becoming, they're considered now as snacks, not as groceries. For example, ice cream. If you buy a container of ice cream below 500 milliliters, and there are lots of them, like Häagen-Dazs, Tim Hortons, Ben & Jerry's, all of them have actually fallen below 500 milliliters. that's a snack now. So if you go to the till, you'll be added, they'll add a tax. And sometimes you don't even notice. It's not really explicitly mentioned on your grocery receipt. Granola bars, 6 bars in a box, not a snack. 5 bars, that's a snack. So it tends to cost way more. So some of the fiscal policies that we have in Canada really add to your food bill without really noticing.
Okay, Ted, welcome back. So the most common financial advice I've heard for the last 500 years, I might be exaggerating, is that the foundation of your financial plan should be owning a home. Have you heard the same thing?
Well, not for 500 years, but
Yeah, I'm a little older than you. So today we're going to present the opposite view.
okay.
So we'll get everybody all yelling at us on YouTube
No doubt.
that we don't understand what we're talking about. What other regular expenses should I be thinking about that I've totally forgotten about?
Right. So as I mentioned, especially with the dog treats, and I know for a cat, some people like to give them the catnip and stuff like that so that they have that treat as well. But dog treats are expensive, but I find that, well, I have labs, right? So they'll do anything for food. So I'm very lucky that way. But if you have a dog that trains better with toys, you need to make sure you have enough toys and they like the different toys and stuff like that. So that's kind of a regular thing because dogs do destroy the toys pretty regularly. And then you always have your vet bills. I mean, they do need their annual vaccinations. I know those can be costly, but our neighbor lost their dog because they didn't get them the tick shot. I can't remember the proper name of it. And then they lost their dog because of that. And they're like, oh my gosh, if I had just gotten that vaccine every year, they may not have died, right? So vaccines are an important annual cost. Same with the checkups. Another cost that I do for my dogs is I'll get them a tartar buster. It's a knuckle bone. You keep it in the freezer once a week. They gnaw on it because it helps clean their teeth so they have less dental bills, because dental bills are horrible. They usually put the dog under so that they can clean the teeth, and it's pretty expensive once you have to put a dog under. So I like to spend on knuckle busters as well.
Credit cards, again, they're okay if you pay them off every month, but you got to notice that every step I've taken down this credit ladder, the interest rates have gotten higher. So the mortgage is relatively inexpensive. They know you need it. It's a service and it's relatively safe. The car loan is probably twice what the mortgage rate is, but it's still relatively safe. If you don't pay, they'll take the car. Now we're into credit cards. 11% if you're a good customer, 18% if you're a so-so customer, 30% if you're dealing with
A department store or something like that.
Yeah, that's right. Or you've had payment problems. So credit is bad if you actually, well, so let's say it that way. Being approved for credit is good. Actually using credit so it becomes debt is bad.
Now, what if I get paid by check?
That's where, using a mobile app, so you can take a photo of checks for some of these checking accounts and actually deposit them if your bank offers that. Obviously, it's not going to work for everyone, right? If you're going into the bank frequently, if you're doing bank drafts on a regular basis, if you're selling cars or selling houses or something like that, you always need kind of those proof of funds, cashier's check, money orders, that sort of thing. That's not going to be where an online free bank account is going to make a ton of sense.
Yeah, the perfect person for this is I've got a job, I get paid electronically, I get paid every week, every 2 weeks, whatever it is.
Or there's some benefits that you get on certain days of the month, whether it's parental benefits or EI or something like that. You're just getting some deposits to that account. I mean, you can register these accounts, with a direct deposit with CRA.
With anybody.
Yep.
Yeah, and if I have a job working at a restaurant, I'm a server at a restaurant and they pay me by check every week, then I can still use a digital bank, but I'm going to be taking a picture with my phone to deposit it in most cases. The issue there becomes, is there a hold period? How long does it take to clear? That sort of thing. And this is particularly relevant for a lot of the clients you deal with because you're a credit counselor as well. When someone files a proposal or a bankruptcy, the first thing you say to them before they even file is, you got to open a new bank account.
Yes, exactly.
And the reason you tell them that is why?
just to get them a fresh start, right? It's most important to have that new bank account so that, the bank doesn't take money if you owe them, or, none of the other people that you owed money to go in and scoop any funds that you need to live, right? To pay your rent, to pay for food, get yourself around.
It's always good to separate your assets from your liabilities.
And so that's why when people point fingers at Galen Weston and Loblaws and other grocers, they don't necessarily look at the other parts. There are lots of moving parts making our food more expensive.
And I actually did some research, and I went to the Revenue Canada website, and sure enough, what you're saying is actually true. A cereal bar or a muffin bar is 0 rated if it's packaged 6 or more, meaning there is no GST or HST added to it. But if it's in a package of less than 6, or if you're buying an individual bar, then there is GST and HST. So here in Ontario, HST is 13%. So I pay 13% more to buy 5 bars instead of 6. I mean, obviously, I'm paying more because I'm buying more bars, but there's a tax on the lower number. And so if I'm a parent and I like to put a cereal bar or a muffin bar or in my kid's lunch, and I go to the grocery store every week, okay, there's 5 days in the week, I buy a pack of 5, I'm paying a lot more than if I was buying a pack of 10 or getting the big bulk thing. So that's a huge thing. However, the point is, it was a long-winded way of saying that. We'll edit that out in the final show. The point is, your mortgage payments can go up.
Right.
That's the point.
And it's beyond your control.
And it's because it's whatever the governor says, right? TIF, right. Whatever he says. Now, if you're renting, your rent can also go up.
It can, but to go up any larger than whatever the approved portion is, they've got to get permission from the rent tribunal. So generally speaking, rents go up at a very set rate, whatever that rate is publicly.
Yeah, and here in Ontario, which is where we're recording this, there is rent control on most units, but any unit that came into being after a certain date, I think it's 2018, but don't quote me on it, does not have rent control on it.
Right.
But you've probably got a 1-year lease. So at the end of that 1 year, if you're in a non-rent controlled thing, well, I guess your landlord can raise the rent, but you can also move.
Right.
But you're right. If you're in a rent-controlled facility, well, if the increase is 2% or 3%, that's it. I think the first thing you should do, and this is my advice to everybody in every situation, is crunch the numbers.
Exactly.
So we've already given you a whole list of here's the upfront costs, here's the regular costs, here's the unexpected costs. So make a list of all the possible things. And so I'm thinking of buying a Labrador Retriever, and it's going to grow to be 50 pounds. I have no idea how big a dog is, but let's just for the sake.
He's like 85.
85 pounds. And as a result, my food cost is easily going to be $100 a month, $150 a month, whatever. And then I've got my, all my upfront costs, which could be $1,000 or $2,000 or $3,000 or $4,000. And then I've got my, the regular costs, the vet bills and so on. So I'm a big believer in writing it all down. What do you say? I would
also add, this is a hard thing to think about, and maybe it's easier for me because I did grow up on a farm, but it's very important to think of the end. You're always focused on the beginning, but what about the end? So some people get into a lot of financial costs because their dogs get really sick and they're so connected that they obviously want to keep the dog alive, which I get. But you also want to think about, what is my breaking point? When do I have to say goodbye to the dog? So that's something important to consider before you start as well.
Yeah, and that's a very difficult thing, but I agree.
100%,
you should think about the end at the start and say, okay, here's and what are the things I will be thinking about? One of them will be, what's the age of my pet? The older they get, well, the closer to the end they are. And then obviously the cost is a significant component of that as well. So
sometimes it can cost $10,000 to $20,000 when your dog is sick, and that's just for the year.
Yeah, which is a significant burden for pretty much everybody. Now, you mentioned pet insurance, so let's talk about that then. So pet insurance, like, I don't know, give me some numbers here. How much does it cost? What does it cover? How much money can you save? Like, what, obviously, again, it's going to be all different. If it's a young animal, it's going to be a lot cheaper and so on and so forth. But can you give me some ballpark numbers?
Yeah, because it's funny because I wasn't actually going to get pet insurance because I'm like, no, that's not what we do, and I never did, and blah blah blah. But I actually thought right when I was going to do it, I thought, you know what? What if they do have a problem? So I got pet insurance, and it's about $70 to $80 a month for our two labs, and I was so grateful because 6 months later, Duke was having surgery. So they cover off unexpected expenses. And they didn't cover it 100%, but they covered, I think 90%. It depends on what they cover. They don't cover regular vaccinations, like regular things they don't cover. But if there's an illness and there's medication, they tend to cover that, which is great.
So you're talking somewhere in the $35 to $40 a month range per dog.
Nope. It's $70.
$70.
One's $69 and the other one was $74.
So around, and again, that depends on the size and whatever. But like you said, one vet bill that's $3,000 or could be 5 or 6 or something, then
it was huge.
It's certainly covered. So
in fact, I think most of the marketing firms now are teaching people to ignore debt. They're telling folks to focus on, this is your payment. You can afford this payment. We'll make it an easy installment payment. It's not how much you're actually paying to purchase the item, the cost of borrowing, the interest. This is your payment. And that's just a wrong-headed way to approach things, particularly when dealing with debt.
So you should be looking at the total amount you owe, not the monthly payment.
Right.
Well, isn't that the trick that car places have been using forever?
Sure, but now everyone's using that trick.
Because it used to be, we can put you into this car. It's going to be $99 a week.
Right.
Oh, $99. That doesn't sound like very much money. So now it may be an $80,000 car, and you may be paying for the next 100 years, but you
particularly
focus on
if you've rolled over 2 cars before into it, right?
You got a big shortfall into it.
Yep.
But you're saying that now everyone is looking at their credit card payment the same way.
Everyone, can I afford my monthly payment? So it's not, can I carry this debt? They're not even thinking of it in terms of debt. They're thinking of it in terms of payments.
And they're looking at their payment as just another expense.
I know I'm going to pay it every month, so I've got a budget for a payment.
So I've got rent, I've got groceries, I've got my credit card payment, and so on. Now, that makes perfect sense for something like a mortgage payment.
Right, because it's long-term debt and you've got to live someplace. And we talked about that. A mortgage is going to be, relatively speaking, very low interest.
Yeah, compared to all the other forms. So, I mean, it happens to me all the time when I'm meeting with someone. Okay, walk me through who you owe money to. They walk, and the last one, and I've got this mortgage. Well, but that's the biggest number.
Right.
Yeah, but it's a monthly payment. It's always the same. I put it out of my mind. So the trap then is you start to think that my monthly payment on my credit card,
it's just a cost of living and you got to pay.
It's just a cost of living. And it isn't.
Basically, if you're doing the same thing today that you were last year, you're spending too much money on groceries. So you had to change your tactic. So one, location. Most people don't have time to go to more than one place to buy food a week. Alternate between 3 stores, 1 specialty store, 1 big box store, and 1 discount grocer. So I will alternate. It will make you more knowledgeable about prices, and it will actually allow you to pace yourself to know exactly what to buy and where. Okay, that's one thing. Secondly, avoid weekends. From Friday to Sunday, grocers are absolutely they're strategic. They know that on the weekend you're pressed for time and you want to do other things other than grocery shopping, and there's a lot of volume, there's a lot of sales, there's a lot of traffic, there's lots of people. So they know that really demand is pretty high. So the best days to shop is basically on a Monday or Tuesday. Mondays are problematic because you'll probably see a lot of empty shelves, to be honest, depending on the time that you actually show up. But really, you need to look for options. If you're a senior, by the way, most grocers have senior discounts on Tuesdays. So those are the kinds of things that you can do to save a lot. The other thing that we're seeing right now for consumers, don't design your menu before showing up at the grocery store. Have an idea, but keep your options open. There's lots of unannounced deals out there now, more so than ever because of inflation. You see, in management, when inflation is at 10%, you can't plan. It's hard to plan. It's hard to actually prepare promotions. So there's lots of unannounced deals beyond the flyers and coupons. If you show up and you see that, enjoy tonight deal at 50%, I'd go for it. That's basically, we do it ourselves as a family. All of a sudden, a product, if it's on sale, that becomes the product we're buying.
Now, the other factor we haven't talked about is maintenance. So
Sure.
you own a house, and there's always something going wrong.
Well, if nothing else, you got to cut the damn lawn.
Yeah, and the roof is going to leak.
And shovel the walks.
Something's going to happen.
Appliances are going to break.
And even if you're living in a condo, okay, you don't have to cut the grass and do all those other things.
But you're paying a monthly fee for all of that.
Right.
So it's still...
You're paying one way or the other.
Right.
Whereas with your rent, well, okay, it's all built in.
But it's the landlord's problem.
It's the landlord's
If the toilet backs up and floods the bathroom and destroys the floor and the ceiling of the unit below you, the landlord has to fix it, not you.
Yeah, and hopefully you've got renter's insurance anyways, just so there's
That's a different conversation.
a backup on it. But yeah, plumbing, heating, the roof, the yard,
Appliances.
I mean, all sorts of stuff can go wrong.
Mhm.
If you're renting, you don't have to worry about that.
Well, not even that it can go wrong. It will go wrong. You need to know that when you own something like a house, a long-term asset, you got to budget for all those things because you're going to have to paint at some point. You're going to have to do the roof.
Obviously, that's
Right.
somewhat mitigated by the pet insurance. But if your dog destroys your couch, which is what happened in your case, well, pet insurance isn't covering that. You need the emergency fund to cover that. I'm a big believer, of course, in avoiding debt. That's why I played that clip off the top of the show. You want to be thinking in advance, because if you're going into debt for anything, but certainly for your pet, that's going to put you in a financial bind going forward. What other practical advice do you have that you would like to share with people?
Obviously, so you had mentioned having the emergency fund to try to help you avoid debt. Absolutely. Just to go back a bit, when you are thinking about getting a dog and you can't afford a dog from a breeder and you're not getting it free, like I said, getting a rescue might be a good alternative because they'll be spayed, neutered, they'll have all of their microchip stuff. You do have to pay something, but it's a bit cheaper. So that's something to always think about. And then we've mentioned the toys and the costs of the toys and whatnot. I would say get creative with toys. Like I said, with the dog treats, I was doing them pretty regularly. And then I was like, this is expensive. So my dogs got used to having cucumbers. So I give them the ends. If we have ends of the chicken that we're not eating, I put it in the freezer and I use that as treats, right?
That's why doing the math is so important, because if I've got $50,000 worth of debts, and if the combined interest rate is, 15%, because I've got some credit cards, some payday loans, some lines of credit, whatever.
So that's $625 a month just in interest.
And if the bank says, yeah, sure, we'll give you a line of credit at 7 or 8%, that may not solve my problem.
It won't.
Because I still owe $50,000
Yep.
and I'm still making, big payments every month. That may not be enough.
Well, so what that would do in that case, because of the size of the debts, lowering the interest rate to half would reduce your minimum payments, but you still don't have enough to service the debt.
Yeah,
So
that's the problem.
you're still dependent on that debt. And if anything goes wrong, I'm talking anything, the car gets broken, and so now you can't make these payments that you're supposed to make because you had to redirect it to a new transmission. You're over the edge.
Yeah. You lose your job and your
I don't even want to talk about losing jobs or somebody getting sick.
Yeah.
If you're, making $3,000 a month and suddenly you're on EI for $2,100, you're in a world of hurt.
Yeah. Because you were just and you're not talking about the big things like losing your job or getting sick. You're talking about the little things.
I'm talking
like,
about little stuff. Yep.
I need winter tires, and we call them winter tires, not snow tires. We'll get all sorts of emails on Twitter for people saying they're not snow tires, they're winter tires.
You know how much time I spend on Twitter.
I do. Zero. So don't bother tweeting at Ted. He's not going to see it. So it's the tiny little things that throw you off.
Yep.
And so obviously our advice to anyone who is in that situation is come in and talk to a licensed insolvency trustee.
Right.
Tell me about so that's the spending side of it then. Let's talk about debit cards, loadable credit cards. Like what are all the kids using today?
So with your loadable prepaid, they call them Loop MasterCards or Visas, right? So if you ever looking these things up, you'd be looking up a prepaid MasterCard or a prepaid Visa card. So they offer cashback incentives on certain categories, just like a credit card. But the difference is you're loading up those accounts one time. So maybe you put in $50, maybe you put in $100. Those are your funds to spend. You get the benefits, similar benefits, like the 2% cash back on groceries or gas or whatever it is. But you're not incurring debt to do that. So it's a really common and popular option among people that we speak with, just because you're not racking up new debt, but you still get that, benefit as a consumer of using the different, the major card issuers. So using something like that can work for a budget. If you've got a couple different accounts set up, you can get a paycheck deposited right into one of these cards, right? They've got the banking number, they've got the institution number, they've got the account number. The difference being the check, right? It's not a checking account because you can't deposit a check and you can't write a check from a lot of these accounts.
Okay, so we got to break this down here because you're kind of losing me here. Are we talking about Visa and MasterCard here?
So it's a loadable Visa or MasterCard.
Loadable Visa or MasterCard.
Yeah.
Okay. And so what kind of institutions offer these?
That would be like Coho, President's Choice Financial. It's like a PC money account. EQ Bank has a loadable MasterCard. Wealthsimple's got a loadable MasterCard. And you can tailor it.
See, all these people should be advertising on this show for all this free publicity we're giving them. But,
and so all of them have a different advantage, right? Maybe if you're getting your groceries at Superstore all the time, you're going to Shoppers to pick up prescriptions, maybe that makes sense for you because maybe you just want to have some incentives to buy your groceries there. Maybe. Or maybe you'd like to do
I think everyone boycotts them and nobody goes there anymore.
Maybe. And so maybe groceries and gas you do with like something like Coho. Maybe you have some other big purchases that you do with your Wealthsimple card. You're getting cash back there. It's a loadable card. Maybe you already have accounts there and maybe that makes sense.
And so all those accounts you mentioned, they don't cost me anything. I'm not paying a monthly fee on it.
No.
So let's talk about Coho then, because you mentioned them. So they are a digital bank
that also offer credit rebuilding products. There's a variety of things under their umbrella.
And we've got some data here. Explain what I'm talking about when I say credit creep.
Well, so you were saying earlier, 5% of our clients have houses. So you were using that as an argument to kind of suggest that, well, if you got a house, you're probably insolvency proof. But the truth is the ones that own the houses that have to come see us have twice as much unsecured debt as our average client. So the average person comes to see us was about $50,000. The homeowners, other than the mortgage, we're talking another $100,000.
Yeah, so unsecured debt is everything other than your mortgage and your
credit cards, income taxes, payday loans.
Payday loans, got to get that in. So that's a big thing. So why is it then, if I own a house, I understand I've got more debt because I got a mortgage.
Right.
Why do I have more unsecured debt? Why do I have more on credit cards and everything else?
You got more of the other stuff too, though. So when you own a house, you've got to do all those maintenance things we were talking about. You're probably buying maybe not more furniture, but you're investing in furniture as opposed to getting the disposable IKEA stuff for the rental unit. All of these things, you're keeping up with the Joneses. The people next door got a hot tub. Well, now you got to think about getting a hot tub, all that sort of stuff. It costs more to live in the house, and you don't necessarily make any more money, which means you're probably borrowing to maintain this standard of living.
Maybe interest rates go up, maybe they go down. Chase the promotional rate, right? For a free high interest savings account, when you're moving money between accounts, you just want to have access to those funds, right? You don't want to invest them. You don't want to put them at risk. But like an insured CDIC, high interest savings account, just chase the promotional value, right? Like whether it's 5.75, 4.75, whatever it is, as long as you've got access to that. And I really do believe that access should come with a card too. Some of the digital only high interest savings accounts, you've got to transfer those funds to a destination account. Not going to say that this would happen. It did happen when I was a university student, but a certain bank did have like a pretty significant outage. And I had friends who they weren't able to access funds on their card, right? That makes your life really difficult. So I think if you were ever worried about, there being some sort of outage, I know we had a Rogers outage a few years ago, something like that happens and all of your money is in one account, you're trying to transfer it out. I think having a card for that high interest savings account for an emergency fund, I think it makes sense. You need a tow truck in the middle of the night. You want to be able to access those funds.
Yeah, that's an excellent idea. I mean, I guess having $20 in your pocket is always a good idea too. That won't pay for a tow truck. But,
I think you need a 50 now. I think the
right.
I think the $20 bill is now a 50. Yeah. I think you need a 50 and a 5 when you leave the house.
It's a few 20s that you need. Well, and I like your comment about chasing the promotional rate, because this is the difference between you young people and the old people. Old people like me, it's like, well, I've been banking at the same bank for 50 years. And it's very common that people stay with the same bank forever. Like, that was my parents' bank. That is
100% true.
And so, but And as a result, your bank pays you 0% on your savings account because they know you're not going anywhere.
Yes.
And now in this digital age, when you can just digitally transfer stuff anywhere, it's like, okay, so I had this same discussion with my son on the weekend, who's the same age roughly as you. And he said, yeah, for the last 6 months, Tangerine hasn't had any offers for me. So I haven't given any money. Well, guess what? The offer popped up that I get, X%. And so it's like, okay, well, I'll take some money over here. Game on, baby. I'm going to move it over. And then when that promotional period ends, okay, I'll put it to wherever it needs to go. So
as a consumer, you got to be informed, right? Do a little bit of research. It doesn't take much. They're all running sponsored ads on Google all the time about their deposit accounts, especially in today's environment where interest rates are a little bit higher. They're willing to pay you to move some funds over, and why not do it? Especially in an age where it's really easy to do it from your phone. A transfer takes maybe 2 or 3 business days. We're not talking about having to go into a bank branch, wire money, anything like that. You can do it all from your phone.